Bueno, estimados amigos de Sudamérica.
Very well, dear South American friends, this is the third session of wheat purchase from U.S. Wheat Associates, Santiago, Chile. We are very, very happy to see that we have viewers from all countries buying wheat in South America. So I'd like to welcome Miguel Galdós, Andrés Saturno, Claudio Gomez, Miguel Fernandez Martinez, and Osvaldo Seco in Santiago de Chile, U.S. Wheat Office. Thank you so much for watching us. This is a new virtual activity developed by our office to support, to be able to assist all buyers and logistic operators in South America. So, Mr. Howard J. O'Neill will make a presentation. He's an expert consultant in commodity operations, especially wheat. He was the head professor of IGP Institute at Kansas State University, KSU. At the end of Mr. Neal's presentation, we're going to have a Q&A session. And I hope to have a very active participation from you all. I'd like to remind you that we count on simultaneous interpretation services into Spanish and Portuguese, and English, of course. So those of you who need the services can go to the bottom icon, the globe icon, click on it, and select Portuguese, Spanish, or English. We have updated interpretation. This is going to be a world-class interpretation service, hopefully. I'd like to remind you also that you are fully able to open or close your cameras and microphone. So I would kindly ask you to mute your microphones, those of you who are not making the presentation. At the end, of course, during the Q&A session, you can open your cameras and microphones, and we'll have the pleasure of listening to you and seeing you. Dear friends from Brazil.
Dear colleagues from Brazil, dear friends, we are offering simultaneous interpreting services, and you can find the icon at the bottom of your Zoom screen. We kindly ask you to please keep your microphone off during Mr. O'Neill's presentation. You will certainly have an opportunity to open and to ask your questions. Thank you very much,
You have the floor, Jay. Thank you so much.
And you can go ahead, please, and you need to open your microphone. Thank you.
Perfect.
Osvaldo, are you ready?
Perfect. We are ready.
Okay, we're ready. Well, I'll just start off by saying thank you to U.S. Wheat in Santiago. A pleasure to be here talking to the wonderful wheat customers in Latin America. Today, we're going to talk about ocean freight, and let me just get over and share my screen, and we'll start that presentation. And let me just double check, Osvaldo or the interpreters, is that showing properly on your screen?
Yes, sir, it's working.
Okay, well, thank you, and we'll start. Well, we're going to talk about global ocean freight markets, both the dry bulk sector and the container sector. And we're going to start off with a little bit of history over the last year to let you understand how things evolved, how we got to this current market and why, and what's affecting the ocean freight market rates as we move up and down. You know, as we go back and look at about a little more than a year ago, as we entered 2020, everyone in the ocean freight industry was of the belief that the biggest issue for the year 2020 was going to be the IMO, that's the International Maritime Organization, that the IMO 2020 CO2 emissions regulations were going to be the biggest issue facing the market. And therefore, there was going to be a need to install scrubbers on the smokestacks, on the exhaust stacks of dry bulk and container vessels in order to meet the CO2 regulations. And at the time, of course, as we entered into 2020, VLSFO, which is very low sulfur fuel, was very expensive. Keeping in mind that up through December of 2019, historically, dry bulk and container vessels used what we call bunker fuel. And bunker fuel was the high sulfur fuel, and it had very high CO2 emissions. So as we entered 2020, the IMO 2020 regulations required that all ocean-going vessels reduce their CO2 emissions from 3.5% down to 0.5%. Now that's a big drop, especially when you look at it in percentage. So this is what ocean freight markets were up against. So what were the owners preparing for? Well, they were preparing for the new regulations on CO2 emissions. They were looking to install scrubbers, but those scrubbers were costing $2 to $7 million per unit. So it depends on whether you were retrofitting an existing vessel or whether you were ordering a new vessel with a scrubber installation. Scrubbers, of course, add a mist of water to the exhaust stacks to help wash out some of the CO2 that goes up into the atmosphere. And of course, as we just mentioned, we had very high prices on crude oil, and we especially had high prices on very low sulfur fuel. But as we got into 2020, the crude oil, if you remember correctly, crude oil prices crashed. And the price spread between high sulfur fuel oil and low sulfur fuel oil, it also collapsed. It also came together. And of course, the freight industry, vessel owners, were very much expecting to see an uptick in cargo volumes once the market returned from the Chinese New Year. And they started to order more new ships as a result. But what happened? What were they not prepared for? What was everybody not prepared for? Well, nobody was prepared for COVID. COVID hit the market and dramatically changed everything with freight volumes and cargo demand. 2020 turned out to be the year that no one could have predicted. Economies around the world suffered, and it caused a drop, of course, in cargo demand. And that drop in cargo demand caused freight rates to go down, and then fuel got cheaper, as we mentioned in the previous slide. So at that time, as we were entering 2020, and most of the time throughout the year, last year, freight markets were depressed. We seemed to have too many ships chasing a lower amount of cargo. Here's that chart that shows the spread between high sulfur fuel oil and very low sulfur fuel oil. the very low sulfur fuel oil in green on that chart. And you'll see that at different times, particularly early in 2020, that premium price for a very low sulfur fuel over high sulfur fuel was $200 to $300 per ton. Vessel owners were initially looking to have to pay $200 to $300 a ton more for low sulfur fuel. Now, as you look to the right on that chart, you'll see that that spread has diminished. The spread actually has been under $100 a ton for the most of the balance of 2020 and going into 2021. And it sometimes has been as narrow as $30 to $40 a ton. Here's just a quick look at where very low sulfur fuel oil is available. And you'll see quickly that the US Gulf, Houston, Texas, is among the cheapest ports to refuel. But also Singapore, Hong Kong, Rotterdam are pretty reasonable prices to purchase low sulfur fuel oil. And this is what happened. As you look to the left side of this chart, the dark blue line for 2019 was the percentage of vessels that were using high sulfur fuel. And that percentage was up to 90%. And then you see that arrow that goes to the right, and you'll see that as that very low sulfur fuel oil became cheaper and cheaper, the percentage down around under 20% now, under about 18% of vessels use high sulfur fuel oil. Now, of course, those vessels who can still use high sulfur are the ones who have installed scrubbers. Those vessels that have not installed scrubbers are depending on the low sulfur fuel oil in order to meet the IMO standards. And again, there you'll see there's been a big change around the world. Here is the scrubber fittings, and you'll see a big jump. About 30% of the world's fleet was putting in scrubbers, 25% of scrubbers, and then also ordering new ships with scrubbers on them. Container vessels are among the highest. Container vessels up near 30% that have scrubbers. The rest do not. And this is a chart now of taking a look at what has happened in the Baltic Dry Index for dry bulk freight over the last year. And as you look to the left, you'll see that index rate of about 2,000. And from 2019 through 2020, even entering 2021, you'll see that the dry bulk index really struggled and could not get over an index rate of about 2,000. But as you look into April of this year, March, April, you'll see you'll see a dramatic rise in that rate on the index rate. So we've seen a large jump in the 60-day market, the past 60-day market, in those dry bulk rates. And of course, you also see more recently, just in the last week, this week, things starting to come off those highs a little bit. But we do have higher rates and higher indexes. This is the same Baltic chart, except rather than looking at the entire Baltic dry bulk index, we are just looking at the Panamax rates. And again, they struggled to get much over 1,500, 2,000. And now you'll look at those Panamax ships that are going to be hauling 55 to 70,000 tons of cargo. You'll see that dramatic rise in the April-May period. Now, the other thing to look at is this. I'm going to go back a chart, excuse me for a moment. This is the dry bulk index up to this morning, and what's happening in the nearby current market. In other words, in the 30-day market. When we go to this next chart, This is over to the right, the red line that you see is that nearby 30-day market, spot and 30-day shipment period. But as you look out to the right, you notice that white line is what we call the forward curve. And this is the FFA, the Freight Forward Agreement, the paper market for trading freight futures. And the freight forward futures look pretty high in the near term, but you'll see that everyone is not quite as optimistic about freight rates as you look out forward. And the same thing is true in the Supramax vessel size. High rates here in the spot and 30-day market, but much lower rates trading in the futures market for freight as we look out towards 2022. So most of the excitement, most of the optimism is in the nearby market time frame. So those who are trading the futures market, the freight forward futures market, can lock in lower rates for 4 months forward, 6 months forward, 1 year forward, etc. We'll have to watch and see how that transcends. Now on this market, we are looking at the FFA freight forward market daily higher rates in today's market. And this was updated, actually, I should update the time on that slide. This actually is updated as of this morning. So as of this morning, we have Cape-size vessels trading at 39. I'm sorry, I'm gonna go back. I misspoke. Let me just let you take a look at this. This actually is the freight forward market for May 7th. This is how the market looked a week and a half ago. 39,000 for Capes, almost 25,000 for Panamax. Supramax, which are the vessels that are going to carry 40, 45, 50,000 tons. Now we jump forward to today's market, and you'll see that we've had the market come off. We've seen a market drop since May 7th. And you'll see instead of 39,000, the large Cape-size vessels are trading at about $34,000 per day. So those have come off in price. As you look at June, it's kind of flat, May, June. The fourth quarter of this year, a little lower. And looking out to calendar year 2022, lower yet. So that shows you that forward curve. Panamax vessels, the ones that we're going to look at, Panamax and Supramax, looking at those in the grain industry and the grain freight markets, you'll see again, those have come down to about 24,500 in the May, June, a little less for the fourth quarter of the year. And looking out into 2022, down around $16,000 per day on the daily hire rate. Supramax are very close in daily hire rates to what the Panamax are trading. In some cases, a few dollars higher, in some cases out forward, a few dollars less. So you have the Supramax and the Handymax vessels very close right now to the Panamax daily hire rates. So when you look at the demurrage or dispatch that would have to be paid on a charter today, it probably is going to show something close to $25,000 on a time charter rate and on a demurrage and dispatch calculation. Now we'll go from daily hire rates in dollars per day to dollars per ton in the freight rate. And that's, of course, what most grain buyers want to look at is tell me how many dollars a ton it's going to take to go from the United States to my port. We talk about and we use China and Japan, as you will see up on the top of this rate chart. We use China and Japan as the benchmark because, simply put, there's a lot of volume that trades in that market. United States to China, United States West Coast, and US Gulf to Japan is a very common market, and it's one that we can follow and we can index on a daily basis. US Gulf to some other markets, you don't see those rates be visible, and you don't see a lot of trading every day or necessarily every week. But if you look at the bottom of that chart, you'll see the 40 to 45,000 tons, US Gulf to Chile, estimated in the current market at actually about $44 or $45 per ton. So that is what we would estimate to come from the US Gulf down to Chile on a grain shipment. This is just a chart showing, again, US Gulf Japan, using it as our index, using it as a barometer of how rates are moving globally. And we look at that as a benchmark. And you'll see, again, going all the way back to 2003, that red line across the chart shows us that freight rates actually have, in a historical perspective, been pretty stable, except for that 2007 period in 2008, where we had very dramatic markets. But the rest of the time, those rates using US Gulf to Japan as our benchmark have ranged between $40 and $60. They've had about a $20 range, and right now we're up near the high of that range. We're at the high mark, looking over an 18-year period of time. So that makes us ask the question, are rates now about to go back down a little? Have they had too much of a movement upward? Or are they ready to go into new territory and go even higher globally? If you read the news stories about dry bulk, and most of those stories are written by people who represent vessel owners and vessel operators, you'll see that they all believe, and they talk almost daily, they talk about the stars are all aligned for big economic growth and the super cycle in freight markets. And if there's a super cycle in commodity markets, well, that must, in their view, that must include ocean freight. So everybody's emotions, that is everybody who's a vessel owner or a vessel operator, the emotions are running very strong right now, thinking that we are going to have, and we should have, a big increase in freight rates. In other words, freight owners feel that they suffered financially through 2019 and through 2020. But now as we go into as we're moving through 2021, the good times ought to be upon us. So that is the approach, that is the thought process going through most ocean freight news articles right now. And I think we have to think about how much higher freight rates can actually go after the current rally that we have seen over the last 3 months. And I think a lot of that rally, a lot of that price has been encouraged by US government stimulus payments that have, of course, increased our economic growth and our consumer demand. And we'll have to see what happens when some of those stimulus payments stop coming. This is just a quick chart that shows you dry bulk the order for new vessels, and you'll see that red line on the right showing that new order, because vessel owners have suffered financially over the last 2 years, they have not been ordering a lot of new vessels. But here is that chart again, and what you'll see on the far right is the fleet, the total dry bulk fleet, looks like it will have a growth of about 2% this year. In other words, we will increase the global freight vessels in the global fleet by about 2%. And that's a reasonable figure. If vessel owners can keep their hands in their pockets and not run out and order a lot of new ships, then I think they can keep better control of the market and they can have a better price environment. But if they run out and order a lot of new vessels, they can spoil the fun, so to speak. They can spoil and probably will not be able to keep as much of a rate structure in place. So dry bulk outlook is more or less like this. Hope springs eternal. They're very optimistic. Again, they've suffered through 2020 and they're looking for 2021 and they're looking for 2022 to bring better times. Better times, in their opinion, is higher freight rates. I think that in general, it's a reasonable expectation within reason. In other words, I don't think we're going to go crazy. I don't think rates are going to continue to go straight up in the air. But as global economies improve, as we hopefully come out of this COVID environment and economies open up and become more robust, logically, we should see more demand for cargo of all types, grain cargoes, as well as consumer goods on container ships. So we'll have to watch that economic growth carefully because that degree of improvement in the global economy is going to be what impacts ocean freight rates going forward. And that's my outlook for the dry bulk sector. I'm going to move on now and we'll talk a little bit about the container markets. Container markets also had a difficult year. As a matter of fact, if you look back over the past 10 years, containerized vessel owners have been suffering financially. They've had very difficult times. They've had poor economics. Many container companies lost money and many went out of business, frankly. And just this last year, 1,900 boxes were lost at sea. So I hope your cargo was not in one of these boxes that fell overboard into the ocean. But all is not lost. 2021 has indeed been a better market for containerized vessels and the containerized movement of cargo than even better than dry bulk. Here's a picture of what we just discussed. The top 20 container lines, shipping lines, top 20 shipping companies have now become the top 12. There has been a substantial consolidation because of the poor economics that existed over the past 10 years. And now we have fewer shipping lines. And we therefore have reduced competition. And that reduced competition has helped container lines increase their rates. So what happened in 2020? Well, we saw consolidation. We saw vessel layups, vessels just going to anchorage. We saw slow steaming in the container market. We saw very little management self-control because every time one shipping company raised rates, trying to improve the situation, one of their competitors would lower rates. And then the rates would all come back down. This year, we have seen much better self-control among competitors. When one shipping line seems to raise rates, the other competitors seem to go along and raise their rates also. So there's been a different environment on management self-control in this last 8 months than we have seen in many years. And of course, we've had this COVID situation. And that COVID situation has resulted, everybody was asking last year, due to this COVID situation, due to market shutdowns, due to that lack of demand that resulted from last March to about this March, what happened is everybody wanted to know what's going to happen. Are we going to have a recovery? When will that recovery take place? And of course, what will that recovery look like? Will it be a V-shaped recovery? Will it be a U-shaped recovery? What type of recovery will we have? Well, at the moment, what we're witnessing is more or less a V-shaped recovery.
Campanhas de prevenção do suicídio, de conscientização sobre doenças raras,
and
as
that
atividades de
V-shaped
integração que a
recovery,
gente já tinha comentado,
I'm getting a bunch of
os
Spanish language
passeios,
over
as
my
recreações ao ar
speaker.
livre, que é importantíssimo para que as famílias e as crianças possam participar, interagir, aprender com outras pessoas,
But that
também
V-shaped
acompanhar,
recovery has
está
caused
sempre acompanhando
problems.
no que se refere às aulas,
Just to let the translators know, as I'm
acompanhar a atividade
talking,
acadêmica.
all I'm hearing is Spanish.
Então, a gente está compartilhando
Yes,
isso.
sir. Can you please ask the operator, the host, to mute whoever has the mic on? It says
Oh,
Spanish here, please.
I'm sorry, I apologize. I don't think it's the translators. I think it's one of the participants with an open mic. You're correct. Thank you. At any rate, that V-shaped recovery has been welcomed because economies are improving, but it's also caused problems because we had a dramatic downturn in cargo demand, followed by a dramatic increase in rather quickly increase in cargo demand. And that cargo demand, of course, was not just it came from two primary sources. Those two sources were, one, when everybody was sitting home and not going to the office to work, they were buying many consumer goods shipped to their home, and that drove a lot of consumer business. Everybody seemed to want to buy clothing, electronics, new telephones, but also exercise equipment, all kinds of things at home. While at the same time, we had a large uptick in what is called PPEs, protective gear for medical professionals, and of course for consumers, masks, hand sanitizer, gowns, and face masks. Those are what we call PPEs, protective clothing items, and they were in very large demand. So we had regular consumer demand and demand for medical protection equipment and devices, and all that hit the market at the same time. And frankly, the container market, most of that shipped in containers, container market had a difficult time meeting that large, quick uptick, increase in demand. And what happened when that occurred is the shipping lines had to create efficiencies in order to meet the new demand. Efficiencies meant that they needed a quick turnaround. They needed to bring consumer goods from Asia, particularly China, to the United States and to Europe and other markets, unload them, and very quickly get those empty containers back to Asia to be reloaded with more consumer goods. So they did not wish to wait for grain or other cargo to be loaded in what we would normally call a backhaul, reverse movement. They just started picking up every empty container they could find, putting it on a vessel, and returning it to China or Asian ports. And that had caused quite a logistical problem in the container markets. Turn times had to become very quick. Speedy returns was the objective of every container shipping lines. And we had a large series of what is called GRIs, General Rate Increase. Every shipping line started to increase container rates, put in a GRI of $200 to $400 per month. And shipping rates just went up and up and up on containers, and service went down. Service suffered. This is a quick look at, this is LA Long Beach in the US, Europe and US East Coast. And I know it's a complicated chart, so just look at the arrow, the red arrow on the right. And that shows you how quickly, how much of a quick upturn we had in cargo demand and cargo rates from the end of last year into the first half of this year. This is a chart of the Drewry Container Index on rates. And again, that red line shows that we had 180, actually at one time near 200% increase in the indexed rate for containers. So big jump in rates. If you look at what's happening today, you'll see that those rates have leveled off in the last month, and they are starting to moderate. So we've had a downturn in those rates. This is the rate from Asia, China to the west coast of the United States. And you'll see it's been over $5,000 per container, and now it's down below that level. Hopefully we'll maintain that better rate, and we'll have a little easier rate structure looking forward. Oh, hit the wrong button in the wrong direction, excuse me. Hopefully we can keep things to moderate. On this chart, we're just looking at spot rates going from Los Angeles to Shanghai, and it shows you how much they have jumped. Down below, in the lower part of this chart, in this slide, you'll see the 40-foot, 40 FT, 40-foot container rate from Chicago to Chile, to a Chilean port. And that rate currently is rated at about $1,500 per container for a 40-foot container. And a 40-foot container will hold approximately 25 metric tons of grain. So 25 metric tons, you divide $1,500 per container, and you will get a rate of about $60 per ton. US East Coast actually is slightly less. You'll get a rate from the East Coast to Chile of about $1,100 to $1,200 per container, and that would equate to about $44 per ton. Now, keep in mind, grain off of the US East Coast, the grain itself is more expensive than out of the Chicago or Kansas City area. So though the freight is cheaper, the commodity will be a little bit more expensive. And particularly when we're looking at wheat, though you can get soft wheat off the East Coast, it would be difficult to get hard red winter or spring wheat from East Coast ports. Those would primarily have to come from the Chicago or Kansas City area. But there's the current market for containerized freight. If anybody is looking for small volumes of specific protein, it's possible to get some service from the interior of the US to Chile. Logistics, as I just mentioned, have been very challenging, very difficult. And I think it's something that it's been a mess, quite frankly. And when I talk to shipping lines, people like Maersk and Evergreen and OOCL, they're telling me that the complicated logistics probably will remain difficult going towards the end of this year. But maybe once we get past the Christmas shipping season, and keep in mind that in the container business, the Christmas shipping season is August and September. Everybody has to get the consumer goods to the stores before Christmas, when the Christmas shopping begins. So when we get past the current Christmas shipping season of consumer goods, when we get out maybe towards November or December, possibly we could see things improve. By improve, I mean slightly lower rates, some better logistics, some better handling of cargo. Also must keep in mind that the US railroads, the BNSF and the Union Pacific Railroads, have put in weight restrictions, maximum 52,000 pounds per container, which actually, for the time being, restricts container volumes to about 23.5 tons per container. So keep your fingers crossed, and hopefully November will bring better rates and better service. And this is again showing you LA Long Beach and the record volumes that they've been handling over the last year, why everything jumped up so dramatically, why logistics got so challenging. I think it's also interesting when we look at world ports. And here in the United States, yes, we like to think that we're important and we're significant. And Los Angeles, what we call LA Long Beach port, is the biggest container port in the United States. Sorry, my hand got crazy with the mouse. That is our biggest port for containerized shipping. But when you look at it on a global scale, we rank, LA Long Beach ranks 18th. It looks rather small compared to some ports in China, some ports in Korea, ports also in some other Taiwan and some other countries. So we think LA Long Beach is big, and we think that has handled a lot of volume, which it has. But boy, you look at it and it's small in comparison to some Asian and other ports. This is a chart, unfortunately, that shows us the service index, on-time service and reliability of container lines. And just as I was discussing with you, rates have gone up to the highest rates I've seen in the last 30 or 40 years, and yet service has gone down to an all-time low at the same time. So hopefully we will be able to get to a better situation soon. While all this is happening, because of the higher rate structure, you will note that operating profitability among container shipping lines is at a 10-year high. So you look at that chart, and all of these container shipping lines, Maersk, OOCL, Costco, Evergreen, they are all making near record profits. Now that's very good, that's very nice for the shipping lines who have suffered over the last 10 years. They are now extremely profitable, and that's good. But, however, along with everything that is good comes other repercussions, other impacts. And we're going to talk about that in just a moment. You'll see here that what we ship in containers, soybeans, distillers dried grain, corn, and other grains and animal feed. Wheat is not a big commodity to be shipped in containers, but we do see some specialized wheat, particularly higher proteins, specialized milling quality wheat does move in some containers. Skip that for a minute. When we look at where do most containers go, most containers of grain ship from the United States to Asia. As you'll see on this wheel chart, pie chart, Taiwan, Indonesia, Vietnam are the big destinations. But there are grain cargoes that ship in containers that go to Africa, some that go to South America. Again, more in the specialty grains category. So, a few concluding thoughts. COVID immunizations are increasing. COVID deaths are decreasing, at least here in the United States and in Europe. Hopefully in South America. I know Brazil is struggling. We of course know that India is having serious trouble. But thankfully, in areas of the world where the immunizations are increasing and becoming a higher percentage of the population, COVID illness and hospitalization and deaths are decreasing. So that's a good thing, and that's helping economies start to open up. And the hope and the expectation is that global economies will gradually improve in 2021 and as we move into 2022. Everybody would like to see this COVID put behind us and see economies get back to normal. If that indeed occurs, we probably will see an increase in cargo demand and slightly better dry bulk rates. I'm not sure that we're going to see better, or that means higher container rates, because in my personal opinion, we've already seen a very large spike up in container rates. I would think that from this point forward, even if the economy improves, we should not see a big increase in container rates. Maybe a moderate, a small increase, but as we get towards the end of the year, very possibly a lower rate in the container sector, but still some possible room to move up in dry bulk rates in those 30,000, 40,000, 60,000 ton shipments of grain. I do want to caution, because as I mentioned a few moments ago, on the only, we call it the fly in the ointment, the only thing that could spoil, in my mind, the one thing that we have to watch closely, the one thing that could spoil this situation in container markets, is that shipping line profits are at an all-time high. And at the end of this year, the union labor contract on the West Coast of the United States expires and is up for renegotiation. So all these longshoremen, the union workers at the West Coast ports, I'm sure, are looking at the shipping lines making record profits and thinking to themselves, we would like to have some of that money. Now, though it is true that longshoremen on the West Coast make very good salaries. They're making about an average of $180,000 US per year. But I have little doubt that with the profitability situation of the shipping lines, they're going to be asking for more money. And that could very possibly cause some labor disruptions in West Coast ports for container shipments when we get towards the end of the year, December, January. We'll have to watch that closely. It will not affect dry bulk. This is a container-related issue off the West Coast. Dry bulk, fortunately, will not suffer that same labor disruption, or it should not. Well, that's my thoughts on ocean freight for both dry bulk and container going through 2020 and into 2021, and what I think will happen as we get towards the end of this year. And I'm going to stop there. Fortunately, we do see a slight downturn, as you saw on my charts in dry bulk. This week, rates have topped and look to be coming down a little bit. It's we also, of course, if you look at the Chicago Board of Trade, you'll notice that we've had a pretty big, pretty substantial drop in hard wheat and soft wheat futures. So the good news for a grain buyer in South America or anywhere else in the world is over the last 2 weeks, and particularly over the last week, you've seen a drop in cargo cost, both from the cost of the wheat and the cost of ocean freight. This might be a good time to reach out and buy some grain, get some coverage, as we say. You have a buy the dip. You have a good drop in commodity price, good drop in ocean freight. It might be a buying opportunity, in my opinion. But for that, I'll say thank you very much for your time and your concentration on this, your attention. It's been my pleasure, and I will stop my presentation here and leave it up to question and answer period.
Muchas gracias, Jay, por la excelente presentación.
Thank you, Jay, for the excellent presentation. Now we're going to start a Q&A session. We hope we can put questions for Jay to entertain. You can ask whatever language you want, English, Spanish, or Portuguese. I'd like to remind you that for you to ask questions, you must unmute your microphones. You can also turn your cameras on.
Mr. Jay, how are you?
I'm very good, thank you.
Muy agradecido por tu excelente presentación.
Thank you so much for your insightful presentation. I have a question to put.
Sorry, I'm going to speak in English because I'm receiving the
Switching back into Spanish, I think.
Can you hear me?
No, he's asking in English.
Yes, but I have to ask any question. I have to go to off or English.
Off.
Perfecto. Jay, now you can hear me. Thank you very much. Excellent presentation. I have one question, my friend. Why we see differences, important differences at some time of the year of same size vessels coming from Pacific Canada to South America than and comparing with vessels that are coming from Pacific US to South America. At some times of the year, the difference between one location and another to South American ports is important.
Miguel, the answer to that is, and this is what is sometimes very confusing in ocean freight markets, whether you're talking about Canada and the US, whether we're even talking about Brazil and Argentina versus US shipments. And it has to do with what we call ballasting. Ballasting is, and many people don't realize, when a ship takes a cargo to Asia, let's use that because that's one of the better examples when you're talking about the West Coast of North America. When a dry bulk ship takes a cargo to Asia of any commodity, and then it has to ballast back. And what that means is for dry bulk, unlike containers, for dry bulk, there's nothing to come back. There's no cargo to bring back from China to North America. So that ballast means that ship is sailing empty. It takes a full cargo to Asia. It has to come back across the Pacific empty. When you're ballasting back empty, you can sometimes, because of the, as you know, the curvature of the earth, you will hit the west coast of Canada quicker, sooner, and less mileage than you will the west coast of the United States. So you will from time to time have what we call ballasters, empty ships say, well, I'm going to come to Vancouver, Canada in less miles, and there's a cargo waiting for me there. I might as well pick that up and take it on to the destination, such as Chile or other markets. But if I have to go to the United States, I would have to go farther south on my route, more nautical miles to get to Portland, Oregon, than I would Vancouver, Canada. So you will have some ships stopping, some ballasters stopping and giving a good rate, a very competitive rate out of Canada going south versus the US going south. And then, of course, as you know, we have different commodities that are available off the West Coast versus the Gulf of the United States. So that comes into play. The cost of fuel, the volume and attitude of the ballasters coming across the Pacific comes into play when you look at those competitive rates.
Excellent. Thank you very much. No sé si alguien tiene alguna pregunta adicional para el señor Jay.
Do you have any further questions to put, Jay?
Do any of your customers online, I'm just curious, have a general personal opinion of what they have seen recently with the high price of wheat and the high price of freight and this drop? Do many of them see this as an opportunity to enter the market, or do many think they'll just wait and see what happens, wait some more time?
I don't know if anybody wants to share that information. What I understand is that most part of the milling industry in our region, they are covered. Last month, they were covered until maybe August. So depending on the tools that they are using, maybe they can find some opportunities here, no? But in general, all this COVID situation, everybody at South America, in South America milling industry, they were long in the market. Mm-hmm.
Well, I understand that the last month has been pretty scary.
Correct. We know that. Thank you, Yaya.
Si alguno de ustedes quiere hacer una pregunta en
If you
español, en inglés,
want to ask in Spanish, English, or Portuguese, you can do so.
me parece que
I think
el canal
that by
apagado o el canal off,
turning off the channel at the bottom of the page. We can hear you, no problem. Can you hear me, Osvaldo? Yes, we can. Yes, Eduardo, how are you? Very well. I have a question to ask Jay. I apologize, I'll ask her in Spanish. What can we expect for Q4 of this year and Q1 of 2022?
And I presume that you're speaking of dry bulk, correct?
Me habla de carga seca. Me habla.
Con un mercado al alza.
What can we expect from this bullish market? The bullish market, what can we expect for Q4 and Q1 concerning ocean freight?
Okay. In the dry bulk sector of ocean freight, traditionally, historically, traditionally, December of every year, moving into the first quarter of the new year, tend to be low periods, tend to be periods of time where of a reduction in demand. And so generally speaking, I would say if you look towards Q4, November, December of this year, I would expect slightly lower dry bulk rates. And the same thing, say, going into January. Now, after that, we could see, again, traditionally, you would see a gradual rise, a gradual increase in rates after you get past February of a new year. Now, I have to add to my comment that, of course, everybody is watching China. China is what we call the big dog in the market. China is impacting everything. Commodity prices, freight prices, everything. So what people, and we don't have an answer, obviously. We don't have an answer to what exactly China will do. Nobody can predict that perfectly. But China, as we know, has already started to purchase new crop corn from the United States. New crop corn is going to be November, October, November, December shipment from the United States. And if China continues to put on a big shipping program, then the fourth quarter of this year could be more exciting from the standpoint that rates could increase based upon that heavy demand from China. And the same thing could be true going into the first quarter of the year, although most of the volume should sit in the fourth quarter of this year. Grain volume going to China, whether that is corn or soybeans. And so we're watching China. Everybody's saying how big will their shipping program be? Will they come back this coming year, this coming crop year? Will they come back as big a buyer as they were this year? Or will they get their stomach full and not need to buy as much? I don't know the answer to that. China doesn't share that kind of information with anybody. But that's something we have to watch closely. So again, I think that my overall opinion is a slight reduction in rates, but I want to watch China very, very closely and see how their volume of purchases to be shipped becomes.
Okay, thank you.
I will add, if just to, since we seem to have a moment, I will add something here. China is, if you look at commodity prices, if you look at freight prices, we
Buenas
would
tardes,
not,
sí. Hoy día.
not be at today's levels if it were not for China. So China is responsible, their volume of activity, of buying activity, China has been responsible for largely responsible for the increase in grain prices and the increase in freight prices. Now, if China were to slow down, it would have a dramatic impact. Yeah, everything would settle back down. So again, the China's activity of buying commodities, corn, wheat, soybeans, and of course wheat this year has been an important commodity to China. Muy importante. It's just, that's the big dog, and we must watch what's happening there. I don't know. Well, again, we have to watch it closely because that is going to dictate how our commodities prices move. It's going to dictate how our freight prices move. We're going to have to watch it. And then as a side note, I don't know if anybody's interested in my opinion on this, but as a side note, I will also say this. Personally, I'm scratching my head and I'm curious as to why China has such a large volume of buying requirement. They're buying more corn than they've ever bought. They're importing more corn, more soybeans, more wheat than they ever have before. And I may well be missing something, but I don't see they have that much demand. I do not see they have that much requirement for this year, for the current market year. So it makes me wonder why they have such a large purchasing program. And I only say that from the standpoint of, to me, it seems like China is stockpiling. It seems like they're building their reserves and their stocks. And that makes me wonder why. Are they getting ready to do something politically that they think the rest of the world will not be in favor of, and they need to stockpile? I don't know. But if something like that exists, if by chance something like that is happening, it would be what we call a black swan event. It would be a big surprise. It would have a dramatic impact on our markets. So we have to watch China closely.
Tal vez porque tienen un riesgo que nosotros no tenemos, que Occidente no
Maybe because they have a risk that the West doesn't have. Maybe China has a risk that the West is not has. The risk of having such a huge population that cannot be without food for a long time. Otherwise, their whole system would collapse. Yes, the problem would be whether in 1 year, China has a weather problem and they have a much smaller crop than they normally do. This would hugely affect world trade and world economy. Somebody had raised their hand, Mr. Enzo, no longer there. Do you still have a question, Mr. Enzo Galuzzo? Apparently not. No, the question has already been answered. Thank you. Thank you.
I have another question, Jay, something that I want to hear your point of view. We have seen in one country of South America that not this year, but a couple of years ago, they imported more than 6,000 metric tons of wheat in containers. Do you see a possibility in the future to have competitive prices in grain commercialization through containers instead of bulk?
Yes, you bring up a good point. We have to watch carefully the price movement or the price spread between dry bulk and containers. And we certainly have seen, again, we look back over the last 5 years, and containers have suffered, as I mentioned. And generally speaking, when dry bulk rates increased in price, container rates did not. Container rates remained low. Container rates got actually very cheap for a couple of years. And when those container rates get very cheap relative to dry bulk, we do see a switch. We do see people switching from dry bulk to containers, and we do see an increase in the amount of container business that the U.S. exports. So whether it is Asia or South America, yes, there have been opportunities when we have had cheap container rates and dry bulk rates that are increasing. Now, if you look at the last year, it has been just the opposite. Container rates have gone crazy. They've gone straight up in the air, much faster than dry bulk. So today, no, you would not see that today because container rates have priced themselves out of that opportunity. And that may last, again, for another year, in my opinion, the relationship of high price container rates versus dry bulk. But again, gradually, we well could return to a adjustment in that relationship that could make it attractive to do containers again. But I don't see it maybe for the next year because containers have gotten into this super cycle of cargo demand, and the rates are just so darn high. Unless, you know, the single exception to that is if somebody says, I don't need 40,000 tons of a high protein spring wheat. I only need a smaller volume. Then that still would make containers attractive for a low volume of a specialty wheat product or other product. But otherwise, probably not in this current environment. I don't see that happening again.
Yeah, well, only to confirm what you are saying, yes, in this case, this business was a special doom from the U.S. for a South American customer, no? From that desert durum specifically. So in that case, was. And thank you for your answer.
You know, also in Miguel, to help put that in perspective, if you look at the weekly shipments by container, U.S. grain shipments by container from the U.S., and I put that in my transportation report every week, to the entire world, those container shipments have dropped dramatically. We used to export 130, 140,000 tons a week in containers. And you look at last week's report, we were about 58,000 tons. So it's been cut in half recently, and that's because these container rates have gotten so crazy.
Perfecto. Thank you very much. Yeah, excellent answer.
Y el señor Douglas,
Mr. Douglas has a question.
Thank you so much.
Muchas gracias.
So, Jay, my question is regards the order book. So if you look ahead, we don't see much of perspective of this industry to order new vessels. And apparently, most of those order book is the delivery will be concentrated on this year. Would you believe that such delivery might affect the nearby prices by pushing down because of the more supply of the new shipments coming in over 2021? And also if you could talk about what's the perspective for new orders because of the new freight rate that we have today. Thank you.
If keeping a couple of things in perspective, the last big uptick, the last big increase in new vessel orders came in 2006, 2007. And some of those deliveries rolled forward into 2008. The general lifespan of a dry bulk, or any ship for that matter, is 25 years. So usually when a ship hits 25 years of age, it is an old lady. It is old and generally getting near time to be scrapped, to be demolished. But if you take that last uptick we had in dry bulk freight of new ships of 2006, 2007, 2008, we're not quite at the 20-year mark for those yet. So point being, we still have a fairly good number of ships that are not too old, of ships that are not near the end of their life yet. But give it a few more years, they'll be reaching that point. So a 2% increase in the dry bulk freight, 2% increase in new ships, net of what is being scrapped, sold for scrap. A net increase of 2%, I think, is rather appropriate. It will not cause disruption one way or the other. I think if we had a 4% or 5% increase in new ships, it would cause an oversupply, given the economic scenario at the moment. And that's something that I think we need to watch, because this increase in freight rates and this attitude, the opinion or the attitude of ocean freight owners that we're in a super cycle, tends to drive people to think, this is a golden opportunity to start to buy new ships again. So we could see more than 2% develop. We just have to watch these ocean freight. These ocean freight owners generally do get overly excited when they see a market increase. So we'll have to watch that. But anyway, to answer your question, I don't at the moment see a big increase coming in new ships yet that will cause the market to soften just for that reason alone. But we'll need to watch and see if that changes.
Thank you.
I will also add quickly, just for a quick moment, these IMO 2020 CO2 emissions have been very serious. Everybody's trying, and the attitude today globally about climate change and the need to do something about climate change. And that is also affecting the ocean freight industry. It's estimated that shipping represents about 17%, 17 to 20, depending on what survey you read, of global CO2 emissions. So people feel, and industry feels, that it's the responsibility of shipping to reduce their CO2 emissions even lower than that 0.5%. And when we reach 2025, so what, that's only about another 3.5 years away. When we reach 2025, there will be more restrictive requirements put in place on shipping CO2 emissions by Europe, by the United States, by other governments will put further tighter restrictions on those CO2 emissions. So we also have a lot of ship owners say, what should I be looking for in the future? If I order a new ship today, should that ship be LNG, liquid natural gas? Should it be hydrogen powered? Should I put sails which in a couple of ships is being done. Should I add sails to the ship? What can I and what should I do today to look forward and meet the more stringent requirements of 2025? So we'll have to watch that also.
Jay, ¿me escuchas?
Can you hear me, Jay?
Yes.
Back to the vessel availability worldwide. Many years back, 2008 to be more precise, there was an increase, a record ocean freight increase in rates. And shipyards were all filled with orders. Many ships were built, and after that there was an incredible decrease in rate prices. Therefore, many ships were idle, basically. Now, again, by talking to some traders, they're explaining why freight is so high, because demand is higher than supply. Well, and they're not expecting many shipbuilding orders. And the other important thing to be taken into account is also emissions and pollution. How do you see this market? Is it true that demand is higher than supply? Or how do you see that?
Oswaldo, you mean the demand for ships is higher than the supply of ships? Is that what you're referring to?
Yes, sí. Cuando hablamos con traders, la explicación.
When we talk to some trader, the explanation they give of ocean freight rates highs is that there is an imbalance between demand and supply.
Well,
¿Es así o no es? No
is that so? Or are there other reasons at play?
As is true with many things, it's a yes and a no answer. Is there a tightness in ship supply right now? And the answer is yes. Again, blame it on China, because China, if you look at grain business in particular, but you also look at iron ore, you also look at coal, other dry bulk commodities, and you look across the entire globe, you will see that most countries, all the way from Europe to Africa to South America to other Southeast Asian countries, most new demand is not too much. Everybody seems to be purchasing about the same amount, maybe a small increase to what they purchased a year or two ago overall. But you look at China, and China is the one country that has a big jump in what it has been purchasing. Again, iron ore, coal, grains, other commodities. So yes, there has been a spike in demand. That spike in demand has caused some logistical shortages. Again, in ocean freight, and it happened over the last 2 months, we have seen, we also get imbalances between oceans. So you will get periods of time where we say there's a shortage in the Pacific, but there's not a shortage in the Atlantic. So we have ships that get out of position based upon their trading routes. But that gets adjusted, because when we have too many ships in the Atlantic and not enough ships in the Pacific, within a week or two, you'll see more ships transiting over the Pacific, and that imbalance will correct itself. So overall, no, I don't think we have a shortage of ships. Certainly not a shortage. Is there a tightness? Yes. Is current demand keeping up with absorbing the supply of ships? Yes. But I don't see a crisis. I don't see any emergency or major shortage. And we do have new ships coming online. But I also think that as we talk about differences in ship availability between the Atlantic and the Pacific Ocean, we also have to look at ship availability by size. And as I've mentioned over the last few years, when you look at, well, we're building new ships. But what kind of ships are we building? We are building more big ships than we are little ships or smaller ships. So this also is an important thing to monitor and be aware of. So yes, we're building more Capesize, but that's not grain related. We're building more Panamax and what we call post-Panamax, the bigger Panamax ships that too big to fit through the Panama Canal. But we're not building as many Handymax. So it's very possible. It happens often that we say, if you are a grain buyer and you say, well, I just need 30,000 ton shipment. I don't need 60,000, 70,000 tons. I just need 30,000. I probably will have a more difficulty finding a Handymax ship for 30 or 35,000 tons. I'll have more tightness, more difficulty in that sector than I would finding a Panamax ship or a post-Panamax. So it depends on, again, what ocean you're looking at, and it very much depends on what size you're looking at. It will be important going forward for buyers to say, the bigger cargo I can take, the better the freight rate will be. We do see in markets right now where the Handymax and the Supermax vessels cost more than Panamax ships. So I can ship to you 65,000 tons of wheat cheaper than I can ship 35,000 tons of wheat. So that's something we have to look at also.
Claro. Y eso también, en el caso de Sudamérica, va a llevar a que
in the case of South America, this will lead to an ever more consolidation of ship owners, because they are going to, for example, small and medium-sized companies in South America and creating buying pools, and there will be fewer smaller ships in the future. So there should be more consolidation of big importers in South America, for instance. I think it's more of a comment than a question.
No argument, Oswaldo. I agree with you.
Sí. ¿Tú me escuchas, Jay? ¿Me escuchas?
Can you hear me, Jay? Yes. Yes, good. Alexis Durin is asking if price increase in containers and dry bulk are towards China. And in the US, it hasn't occurred much change. Is this a speculation from China? There's no shortage of vessels, Trans-Panamax.
Well, again, there's a tightness because we've had a large uptick in cargo demand recently. Recently, again, means over the last 6 months, and particularly over the last 3 or 4 months. But there are a lot of people asking a lot of questions about why is China doing what they are doing, and we don't know for sure. We just don't know for sure. But again, the number one topic is China, what they're doing, and how long they will continue to purchase. And we don't have a good answer on that. I could say many things about that topic, and I don't want to spend everybody's day, but I'm also very concerned. If you read the news, the agricultural news, just in the last, recently, China has had independent private analysis companies. CoFeed is one big one that even Reuters used to depend on for information coming out of China. CoFeed would publish things about China stocks, China inventory of grains and estimated import amounts. The other one is JCI, Hanver Lee at JCI, who has cooperated a lot with a lot of US consulting companies and analysis of China, what's going on in China as far as grain is concerned. Both of those major consulting analytical companies in China have been shut down. The CEOs of those companies have been arrested. It's pretty obvious China wants to control the information that comes out of China. It's scary, and I don't know what's happening or why. I don't know the motivation or what's behind it, but there's a lot going on in China, and we just don't understand it all.
Bueno, el señor Alexis y otros también.
Mr. Alexis and other colleagues think there's a lot of speculation going on. Let us stop here. We would like to express our appreciation to the insightful presentation by Jay O'Neill. I would like to thank all countries participating here, wheat importers, namely. Next session will be number 4 and the final one on Wednesday, the 26th, the same time. Jay will make a presentation on purchase agreements, and also Santiago will talk about and reinforce purchase agreements, CuSums, and others. This will be the last session. We really hope attendance will be as good as this one. Thank you again. You can use the very same link that you used for this session. Anyhow, we're going to send you a reminder for us to have an excellent attendance again. Thank you so much for joining us, and please think of questions to ask Jay. Thank you, Jay. Thank you to the interpreters and to everyone. Gracias, gracias.
Hasta luego. Gracias a todos.
Thank you. Goodbye. Thank you.